together. Just a little bit of background really quick on myself. I've been working in the digital asset space since about 2014. I run a company called NetKey. We do KYC and AML compliance in the space. We've also developed tools to do compliance, real-time compliance for DeFi. I also sit on the board of the Polymesh Foundation, a layer one that was designed specifically for real-world assets and other securities on-chain. And I'm an advisor to Chidex, sit on the regulatory committee of the Canadian Blockchain Consortium. I'm in the leadership group of the Anti-Money Laundering Working Group at Digital Chamber, and a bunch of other stuff in the space that's really focused on compliant assets on chain, which really overlaps with RWAs really well. I'm going to take just a couple minutes for folks to introduce themselves here. After that, I'm going to actually ask you all some questions so we get to know a little bit about who our audience is. And then we'll jump into the questions for the panel themselves. So, Brent, why don't we start with you? Can you just give like a brief background on yourself and kind of what brought you into the RWA space?
Yeah, of course. So I'm a mathematician by education, I'm a scientist, but I've also went into finance. So I started off in the dark side of trading, went into corporate finance, fintech, and more recently, about 3 years ago, I listed an AI company, which is called UiPath. So the first 2 weeks of valuation were $82 billion, and I was one of the very first executives to join. So very strong AI fintech background initially, and I decided to go into the RWA space because I could understand there was a very strong trend in that, and I could see that happen. And although they've been quite a number of initiatives since 2017, I guess. Then I thought this is now the right time. So I'm an angel investor also. I've been angel investing for a number of years, since for the last 2 years. But then I decided, okay, I'm going to start entrepreneurial today and launching a couple of startups actually. I'm launching that now.
Got it. Do you want to mention either of them?
Yeah, so one of them is another one is it's called the Fortune Hive. So it's actually bringing a bespoke luxury lifestyle experience to precisely people that actually invest in very high-end real estate, and a few others.
Got it. So, I mean, speaking of the real estate stuff, Mansoor, you worked on what's probably one of the most famous real estate projects in the world. Do you want to maybe share a little bit about your background and thoughts around tokenization and RWAs?
Yeah, absolutely. Yeah, it's probably the biggest client. So,
yeah,
that's where I was for very busy. My background is very different to Frank here from telecoms. I was 25 years roughly in telecom networks around the world. The last 10 years or so I was in the UK, but I worked around the world. I ran the conversion networks research labs for British Telecom about 5 or 6, 7 years ago. Then I became a regulator. I went to Ofcom in the UK. I was the CTO there. Then I got this call to join this crazy public on the line back in 2019. And of course, how do you say no to something like that? So I just left everything and I went to not far from here, Saudi Arabia, to the desert there. And since 2020 to 2024, I was at Rio. I did a number of roles. Initially, I was setting up the technical infrastructure, private networks, 5G networks, subsea cable networks. I worked on the JV, satellite connectivity. Then I moved to emerging tech, and that's why I got down to the metaverse side. We set up the metaverse project. We worked a lot on robotics and etc. And I worked on the regulations a little bit. So the regulations for NEOM, I don't know if you know about it, but it's a semi-autonomous region within Saudi Arabia, and it will have a certain regulations. So I was in charge of the regulations for infrastructure.
sort of like the free zones here.
Right. So
Yeah.
So effectively, we were working. They're not yet published, etc. So I can't say that. But we thought about how could on the line in particular, lead the world in terms of digital assets. So that was a very interesting piece of going into this work, which I'll talk about in a few minutes. And then for the last year, I went to the line, and I was in charge of technology in the line, corporate solutions. And so I left 2 months ago, Now I'm currently based in Spain, but I'm also going to be reaching back here from also myself. And I'm also like yourself, working with a lot of startups, building a portfolio. I'm really picking out companies and people who are working in domains that I think is missing in tech to actually build the ecosystems that huge projects like the line need in the future. And so a lot of that is the development side. The main startup I'm working with is called Darabase.
Oh, wow.
Darabase.
There it is.
That's another one which I'm not sure about to mention.
That's awesome. So, Naveen, I know you've been working in the space as well. I actually was thrilled to hear that you came into your current role. It's a company that's had a great technology platform for a number of years, but frankly could use some really strong leadership at the head of it. So it's great to hear that you're there. Can you share maybe some of your background with the group here and how it aligns with digital assets?
Yeah, sure. So I come from originally my 15 years of first working experiences in TradeFi, worked at Citigroup in the US, and then with HSBC in Hong Kong, Japan, India, of course, and Taiwan, right? And then after I was building Uber for trucks in India, my own company, decided to exit that and did 7 years at Ripple, was the managing director for South Asia and Middle East and Africa. And now I'm CEO for Crystal Intelligence, right? And maybe like before I tell a little bit about Crystal Intelligence, what I want to say is, so in my mind, the way digital assets will go is in 3 phases, right? So the first phase is Bitcoin, Ethereum, XRP, everything that you see today. And of course, we are all hugely excited. And I think parallel to that would be Napster, right? Initial technology, everybody says, wow, love it, right? And in some ways speculative, some like somebody saying, hey, there is nothing else behind it. But bigger than that would be stable coins, right? So this will be the Facebook, Google era, which everybody says, hey, I use search. So in some ways, stable coins will become like search. You will use it, I'll use it, she'll use it, and we'll just transfer $5, $10 to each other at almost zero friction, like what Google did for search. And the third would be real world assets, right? So a lot of time what happens is we get excited about the space, we feel, hey, this is nothing, but it's just a matter of timing, like it happened in the internet world. You will be at the Napster high and then will be a Napster low. You'll have a Google high, then will be a Google low. But if you look at over a space of time, almost like Neum, over 10 years, you're like, wow, this is real. And that's what underneath blockchain technology is real. It's passing through it, right? And now coming back to Crystal Intelligence, we want to make sure that we remove the fraud out of the system. Because one of the biggest things that switches people off is, let's say you get cheated. You're like, what the hell? Digital asset, or no, I don't want to get into it, right? So what we want to do is take the fraud out of the system, create confidence, so that when you send money to me, I know it's coming from legit source without introducing any friction, right? And that's what Crystal Intelligence does. We work with regulators, we work with law enforcement, we work with crypto companies to ensure that whenever crypto moves from one place to another, it can be safe, it can be tracked, and we make sure that we keep fraud and bad people out of it. So that's what we're doing every day and earning the trust of hundreds of customers every day.
Sure. And your friends at Ripple must be having a very happy day too.
Absolutely.
So they got a great court ruling.
Yeah, so you already saw that today. Ripple got $125 million, essentially the court gave the fine. Earlier it was expected $2 billion, right? So
$25 million is a lot better. And declared not a security for automated trading, right?
Right.
So, relevant to some of the things that are going on here today, it trades on DeFi platforms or centralized exchanges. It's not a security, which I think is a great signal for the industry as a whole.
100%. And also now that we have clarity from the courts, it's much better, right? So it's not opinion of one person versus another.
Yeah, that's exciting. Pranav, tell us a little bit about yourself.
So my background is a bit different from everyone else, and first of all, it's a pleasure to be here. Thank you very much for inviting me. So my background is financial services. Within financial services, I've been across the spectrum: private equity, asset management, structured finance, SME insurance, etc. And I grew through the ranks in financial services industry, and in many ways, when I discovered Bitcoin in 2016, for me, I felt very disconnected with the corporate world. In my experience, large institutions were broken horizontally and vertically, and for me, it was a very simple point that do I want to be part of the future or do I want to be part of the past? So I know the context of the conversation here would be art of the way, and we'll be discussing multiple aspects of it, but that is definitely the future. So, cutting to, let's say, 2018 is when we started Woodstock Fund. Since then, we have launched 2 funds, Cayman and US respectively. And more recently, I'm more focused on setting up a deep tech fund. I think this is where we all connect very deeply. It is focused on data and engineering. On data side, blockchain, but AI, blockchain, AR, VR are converging massively. On the engineering side, it includes aerospace, defense, climate, DIFC, basic DIFC, and about to get a license there. So that's in Cayman, by the way, we are fully regulated. We have a license, so we have been fully compliant from the day zero. That's a non-negotiable for me. So I think probably that is also very important for this topic here. I truly believe that the time has come. We are at a tipping point right now. In many ways, ETFs. When I say it was ETF earlier, now it is ETFs, and ETFs have made a huge difference, and they have legitimized the space. They've also created a bridge for liquidity to come into tokenizing of real-world assets. So very excited and very happy to be in the forum and see how I can participate and participate.
Awesome. Well, now I think we want to learn a little bit about you all, just so as we're talking, we're sort of level set on what's going on. I'm guessing some of these will be some basic things, but then some others. How many people here hold digital assets of some kind? That you actually have some in a wallet, hold it, etc. All right, so maybe about a quarter of the people, something like that.
Only 4 people. I think we have to close this one.
Does anybody work in the digital asset space? Anyone here work in the digital asset space? A few people? Yeah, all right. A few people. How many of you have know what RWAs are? Even.
Well, the same guy.
Same group. Yeah, same.
It's the same guy.
I'm not stunned about that, to be perfectly honest. All right, that's perfect. We're going to actually start from the really baseline here and kind of build up from there. And so we'll cover it. And the way that we're going to run this is we're going to spend maybe about 30 minutes on the questions that we have. And then we're going to leave 10 or 15 minutes at the end for all of you to have questions that you want to ask. So that if something comes up, just let us, we'll have some time for it. If you feel like we're covering something and we're going by it too quickly, feel free to kind of put your hand up at the time. There's only 20 of us here. There's not 100. And if you have a question about it, someone else probably also does. They're just not raising their hand. And so it'll be helpful for everybody if that happens. And we'd really appreciate it. So I think probably the best thing to start out with is just an overview of what RWAs or real world assets are. Pranav, can you maybe help us out with that and get us going?
Sure. So let me see if I can put it very simply. So I sort of take it from where Naveen left in terms of talking about search engines, Napster, etc., etc. In many ways, that's a word that was created, let's say, in the internet space, right? And when, let's say, you digitize things on the internet space, you get words like DeFi, you get words like NFTs, and so they're phenomenal. They're fantastic pieces of technology giving you certain rights on things where the world argues are not real things and we are opinion. We'll come to that later. The important thing is that what does the world really look into and what does the world believe in? They believe in things which are more physical in nature, things which are known to them. So what are the things which are known to them? Things like treasury bonds, things like, let's say, treasuries, bonds, real estate, clothes, companies, human beings, etc. Things, right? So another thing is when we talk about real world asset, tokenization or let's say real world assets, fundamentally we're talking about can we give certain property rights and ownership rights to people who don't have the capability and the capacity to participate in the context of wherever we have reached in the phase of the evolution of the capital world, right now, capital markets and so on. So a lot of people, you keep on thinking or let's say hearing about things like diversification and financial inclusion. And we clearly know that a large part of the humanity does not know how to participate and they can't participate enough. So it creates a possibility using blockchain as a technology that a common person can also participate into assets which are out there, which are proven. Treasuries, bonds, exotics, real estate, etc., etc.
I think that was a really good way to think about it. Basically, you're leveraging the technology behind cryptocurrency to create mass market or broad adoption without having the volatility or some of the risk that's associated with cryptocurrencies themselves. Makes it a little bit more approachable for people. That was really great explanation. Naveen, what are some of the advantages that you see in tokenized real world assets versus sort of traditional investments that people would do on a stock exchange or somewhere else.
Yeah. So let's take a real example. How many of you have heard of Apple? Right? So everywhere has heard of it. Everybody has heard of Apple. Doesn't matter I'm Indian or you're Chinese or you're American, everybody's heard of it, right? But Apple stock today can only be bought on the US stock exchange, right? It's available 95 at the US stock exchange. So somebody in India wanted to get access to Apple stock. They can't. They have to go and trade it in US dollars in the US stock exchange in their own time zone. But it happens at night in India. So it's a huge amount of friction for them to go and play with the Apple stock. So they like the product, they love the company, they think it will be a good bet, they think it's going to increase, but they can't participate. The second thing is they can't participate because a lot of time maybe the price is say X $100, right? So it's too high for somebody who say, I just want to invest 10 rupees, 10 cents, 20 cents, and I want to participate. So essentially what we have done is we have banned access, what Pranav was talking about, right? So you have banned access from time zone, from regulatory, from the amount of money that is required as an entry point, barrier in terms of understanding the US markets, right? But tokenization essentially solves for a lot of these things, right? So now, just a very simple example, if Apple stock was to be tokenized and it was available 24/7 in your currency, and there was a pair against Apple to Indian rupee, Apple to Japanese yen, Apple to Chinese renminbi, Apple to Hong Kong dollar, then each one of us can participate and essentially say, hey, for $1 I want to buy whatever the fraction or of Apple stock or Apple token that's available, which essentially represents the rights of that stock that was available to somebody here in the US. So now you suddenly break the barrier, a choice that only an American have, a Chinese has it, an Indian has it, a Hong Kong citizen has it, a Japanese person has it, a Latin American has it, right? So suddenly you have improved access to everybody in the world who are anyway using the Apple phone, for example. Right? There's just one example. Now let's look at it from the Apple side. Somebody says, all this is good, Naveen, he wants to buy Apple stock, but what is in it for Apple? Right? Why should they bother? Why should they push and tokenize their stock? So everybody has heard of splits, right? Stocks get splits when it's, say, for example, $1,000, you simply split them into 10 shares of 100 each, or 1,000 shares of 10, 1,000 shares of 10 each, right? Why do they do that? Does anybody know? Why do you start to split shares? Like anybody can answer. You can answer, yes. No. I mean that's too complicated. But why do you split shares? Yeah, accessibility. Absolutely. So you want to create liquidity, you want to create accessibility, you want more people to participate in the system. And mostly when you split the shares, actually the value of the shares goes up. So let's assume you have the share at $100, you split it into 10, and it should be $10 each, but normally the price will become 11, 12, 13, 14, because the idea is if you improve accessibility, improve liquidity, then the price increases. So Apple wants that. Apple would want its stock price to increase because now you have more holders, more accessible, and because of that price should rise, right?
And if you have more people buying what there's a limited number of, it's going to raise the price.
More people get exposed to your brand name. More people essentially have skin in the game. If she has Apple stock, she's more likely to buy Apple product, right? And that's just very natural for people to happen. So companies want that. Individuals want that. What stands in the way? What stands in the way is regulation. What stands in the way is technology or platform, and what stands in the way is, I would call it ignorance, that it has never been done before, and hence it can't, or it's too difficult to do it tomorrow. And blockchain solves for a lot of things. Not everything. I think regulation still needs to follow, but it solves for technology and it solves for ignorance.
Yeah, we'll get to some of the blockers in just a minute.
Yep.
So Mansoor, it's really great to have you on this panel because you now have blockchain experience from the work that you've been doing inside of the Lime and inside of Neon. But you've also got a bunch of real estate experience from the work that you've been doing there as well. One of the things we're seeing right now is that real estate tokenization is frankly like one of the things that's leading the way with respect to some of this real world asset tokenization. We see sort of more real estate tokenization platforms than we do, for example, ones that are trying to do Apple stock today. What do you think is about that combination that's really driving some of that?
Yeah, thank you. And I think that real estate is a great place to start. It's a huge asset. It's probably the biggest driver in the world. So obviously the gains from actually making it more liquid, making it more distributed and available are bigger. It's a great place to start. And effectively there's a lot of momentum around. From my perspective, when I got into this space, we were working on Neon. But across the whole of GCC, whether it's here, whether it's in Dubai, whether it's in Saudi, there's multiple projects. The next 10 or 20 years, it's going to lead the world in terms of construction of especially new living environments. And all of them are very ambitious in terms of technologies that they are. So effectively, you've got huge movement in development of new living space, a new way of living, led by NEOM and other projects like that. These projects take a long time to build. They take a lot of money to develop. And in many ways, they can be modularized as kind of a factory. So looking at it in that way, what I suggested in NEOM was that if you look at what we said before, the tokenization space started from the digital, and now we're applying it to the physical. If you look at metaverses or let's say fantastic new cities in the digital space, I found that there were two things that were existing up until now. One is a complete digital twin, a replica of an existing city, which everybody's doing for various purposes, but it's not that interesting because it's just copying the existing. Then you got these fantastic new spaces like Central Land, wherever you can buy plots of land that don't exist, but it's purely digital, and it's kind of a game. What's beautiful about NEOM is it's the mix of both. You're actually planning new cities that are as creative and as iconic as the incredible gaming spaces that don't exist, but you're actually going to build them.
Yeah.
So I said, okay, if we start off that way, how can we make it useful for investors to get in early to the digital side with an option to get ownership of the physical side at some stage, which you can gamify and you can adjust while you're building. Why is that useful and interesting? It's because effectively you can get access to a whole range of investors. There's a certain type of investor that invests in big real estate projects.
And they can feel much closer to the project than they would if they got sent a drawing once.
And the link to
That's
that,
it, yeah.
the link to the tokenization and how you actually move from digital to physical and how you regulate it, etc., are all aspects that are moving really fast. But that's what got me really excited in the beginning. But on top of that, what I really love about tokenization of digital assets is when you create a whole new market as a spin-off, as a derivative of a real world asset that doesn't exist. And in real estate, that's what I found going through the Firebase, that effectively you have a whole world of AR content, that's augmented reality, which now with the new classes that are coming out that are going to be everywhere in the next few years, you can walk around cities and effectively see digital content of any real world real estate. But there is no regulation that's there to allow for advertisers or anybody else who wants to monetize this to actually scale up the market. That's the opportunity that we have now, is to effectively make it a secure bet for advertisers to go and dig into those areas. And the market is tremendous effectively, and then create a new type of property digital rights on top of the existing real world asset, which is tokenized, and you can double monetize on top of that. But that's just an example of what you can do with real world assets by creating whole two separate markets by segregating a certain characteristic of the real world asset. That's where I'm focused now at Firebase. There's a lot more examples of what
That's really cool. I know real estate is just really one part of the luxury real world asset market, which is what we're here to talk about today. And Frank, I know real estate is part of what you do, but you actually do a bunch of work beyond that with other things like diamonds and other high value things. Can you talk a little bit about what's happening in that broader space around, diamonds, precious metals, artwork, other things that are happening in kind of the luxury RWA space?
Yeah, and also maybe to complement what Mansour you were saying.
Absolutely.
I think that, we come from a different angle. So we're looking at this from an investor perspective, right? So if you look typically at ultra high net worth individuals, their portfolio is about 51% made out of alternative asset classes. What you call alternative asset classes is what here we summarize into real world assets. So it's not stocks, it's not bonds, not T-bills, it's not commodities, not gold, etc. But it's very much, real estate, diamonds, and other investments. 51%. Remember that number. If you look at the standard investors, the alternative asset classes represent 5%. 51. Why? Well, because actually the yield on those assets. I'm talking, we're in luxury space. We talk about luxury space here, right?
Yep.
So the yield is enormous on those assets in comparison to standard, bonds or standard real estate, by the way. So, but it is the threshold, the entry ticket.
Yeah, I was going to
very
say,
high.
I can't afford a garage full of supercars.
Yeah. So to give you an example, you're talking about diamonds.
Yeah.
You're talking about diamonds.
Yeah, sure. Diamonds are good.
So if you take a diamond, a 1 carat diamond, so that's 2 grams, that's about that size. The best quality possible is about, 16,000, best, flawless, etc. About $16,000 max. Fancy vivid pink diamond, the same size, same carat, is $3.5 million. So the difference is that white diamonds are going through the floor, and colored diamonds are just skyrocket. Right? So, but you can't afford that. So because what we sell, we have up to 100 carat, 190 carat, often on sometimes on some stones, for example, yellow diamond, etc. So there are multiples of millions. So there's 30, 40 million investment. Even if you are ultra high net worth individual, it's 100 million in the bank. You can't afford that. I mean, it's not that you can't afford to buy it, but you're not going to put all your eggs in one basket, right? You're not going to invest in that, but you want a share of it. You want to be in the game, and that's what we do. That's what we offer, and we do that across a whole set of different asset classes. So whether, for example, it's stallions, equine investments, typically, it's fine arts, it's very high-end real estate, so, developments on private islands, etc. One thing is very important is that people think, oh, God, I'm gonna tokenize, I'm gonna tokenize my real estate. Well, that doesn't always work. Why? Because it's not a magic wand. So you can tokenize. If you tokenize, you take a dacha. A dacha in the Oblast of Tver, which is what many oligarchs have their dacha. It's 1.5 hours from Moscow. Right? It's some Russians love it. It's 1.5 hours from Moscow. It's difficult to get. You demand if you tokenize that, you put it on chain, your liquidity is not going to increase. It's not going to increase. It's not going to change because the demand is not there. The demand won't be there.
I think this is a great lead into where I was going with the next question. We'll stay with you on this one for a minute, which is what are some of the barriers to broader adoption of particularly these luxury real world assets, but it will also apply to some other real world assets as well.
So I think typically number one, I'm sure everyone will agree with that, regulatory.
Yeah.
Right? So regulatory, definitely, yeah. Right? Yeah, you regulatory, yeah. Definitely. And why? And we work under the Magellis. We work with a closed network of investors. So it starts from accredited investors to private family offices to up to sovereign funds, right? And institutional investors in the middle, right? So this is our network. It's a very closed network. We do the same with the assets. We've got a very selected number of assets. So we're kind of okay because there are lots of exemptions, in that space. But if you want to think about retail market as a development approach, then we will be braced. So regulatory is number one because you don't only have the regulatory hurdles at the issuance, not just at the issuance. You need obviously a DLT license. You need your issuer's license, right? But then it's also if the people are buying it, the investors, and you have to comply with the domicile laws that you have to know. So if you're selling to someone in EU, right? If you're selling to someone in Canada, you're selling someone in India, That's a good one. So it's a very different approach. So you need to be extremely strong on that. And so regulatory definitely number one. I think there are a number of others. I think I'm going to be a little bit controversial. I think, for example, platform isn't one. Platform isn't one because I think there are lots of platform as a service, about 20 plus today, tokenization platforms. And I think it's going to become like a cryptocurrency market exchange.
I'd say one thing that's missing on the platforms is shared secondary liquidity options.
Correct.
Right, because the platforms are all really siloed today.
Correct.
And there's not a way for someone that creates liquidity on one platform to then use it on another platform. And so you end up having kind of a...
So, and by the way, I'm not saying to walk in the park either for the platform.
Yeah.
Right? Because you still have to manage integration layers, you have the custodian aspect.
Yeah.
When it comes to digital assets, it's not really their escrow, wallets, KYC, KYB, AML, compliance, etc. You name it. Right?
Yeah.
Right,
Yeah.
Justin?
Yeah.
So you got all that. But then as you say, the third one is probably access to liquidity pools,
Yeah.
as you were saying. So that's the secondary distribution market, but we go to primary, secondary.
Yeah, once you've bought your RWA, how do you sell?
Yeah, what do you do?
Yeah.
What do you do with it? How do you get the capital appreciation, right? So rental returns, for example, in real estate, so you can get through automated contracts, blah, blah, smart contracts that distribute that. But what about the sector? And I think I will sure I've got many. I can talk for the next hour on this, obviously, but
Let's not.
but I would like to cite one more. if
Sure.
That's okay.
Yeah, yeah.
I think that another one is for me, it's very close to my heart. It's the experience, the customer experience. Because don't forget, when you're talking to, high net worth investors, they're not Gen Zs.
Yeah.
They're not Gen Z, right? They're baby boomers. They are Gen Xers. They are millennials at best, right? Not that much into Web3. So seeing NFT monkeys, on a very nice purplish website, it's not for them.
They're not
So
going to put their 22 keywords on pieces of paper and put them in
No.
a safe somewhere.
They won't. And so I think providing a that's what I call Web 2.5 experience.
Maybe
It's Web 2.0 and yes.
maybe there's a need for a platform for that stuff.
Yes, that's what we do.
Jump forward.
Yeah, that's what we try to try.
Yeah.
That's the regulation.
Yes.
So
But not to
maybe to switch gears a little bit, Pranav, you've worked in finance for a while and kind of understand that market and space yet. How do some of the things that are happening, for example, with like partnerships between traditional finance companies like BlackRock and Web3 companies like Securities coming together to do their on-chain RWAs and real-world assets, how does that help break down some of these barriers?
So you're just taking on from where you left. So fundamental issue is up to the regulation, but it is also coming from a space of, let's say, liquidity, right? And essentially, if you look at alternates like fine arts, stallions, etc., they don't have the liquidity because that is why they are alternates. But even the other ones like bond or let's say T-bills, if you want to tokenize, there is not enough liquidity in the existing markets in tokenization space because there is a lack of market makers and participants because the liquidity is actually sitting in the traditional capital markets. So what is needed? Why is BlackRock? Why is Morgan Stanley? Why is Goldman looking at participating into this? It's because they see a phenomenal opportunity for them to distribute their products globally. So this has been the forte of traditional players like BlackRock and others that you mentioned, in terms of having a fat fees on unknown products, packaging them in a very glossy way, and selling them to people who are not meant to hold these products in their portfolio. Right? This has been, let's call it mis-selling, let's call it uninformed selling. There's a spectrum of activity there. This has been the prerogative of investment banks and of the private banks. So what is tokenization doing is that it is displacing these bankers completely away from the picture. This is an inconvenient truth for the incumbents. Now, before I step into the question that you're asking is it the incumbents who will end up taking tokenization as a space forward, or is it the new players like Securities who will end up taking the space forward? What are the strengths of a platform like Securities? Is that they don't have a baggage of legacy. They build their systems from ground up, and essentially like folks like RWAs, and they have they have gone through the hard work of building demand side and also the sell side, both buy and the sell side on both the sides. What would excited BlackRock and let's say others like Morgan Stanley, Goldman, etc. to participate is that they're clearly seeing that the investors are becoming more aware. The regulators are becoming very tough when it comes to consumer protection. That means that there's very limited elbow room for these existing big fat players to maneuver. So definitely their volumes, their margins are dropping. Family offices are going for direct transactions rather than saying that, hey, Goldman, give me your fancy product and I will buy it. They're saying that I will go directly and I will take that specific, investment deal. I will go to him and let's say, buy that particular diamond. I don't need you to be warehousing the diamonds and taking 2%, 3%, 20%, whatever that is. So when these leaders are seeing that there is a writing on the wall, they're saying that let us participate by having let's say significant chunk of these companies which have gone through mitigating their operating risk, and now they can take a chunk of their equity, they can sit on their board and see that all their businesses can come through when the tide sort of shifts. So what is important to understand is that the twains have met with these participations. And this will only increase. So the real answer is that neither the incumbents can succeed on standalone basis from a tokenization perspective, neither the new players like Securities. Of course, Securities is very bold right now, but I'm just saying that what you're building, what let's say various other people are building, it's difficult for them to succeed. It's a chicken egg situation. So eventually, it's a convergence, that is leading to the success or let's say growth. And as I was mentioning, earlier, ETFs have legitimized, cryptocurrencies, which let's say stablecoin regulations, are coming in. Circle has done a great job. And in many ways, that is creating a space that, even the family offices, sovereign wealth funds, institutional investors can directly participate in some of these platforms. My personal thesis here is that eventually there'll be enough concentration. So let's say you have Securities, so you'll have, a few such platforms. There'll be also dominant regional players. For example, let's say if Middle East or let's say especially in UAE, if the top three players have not emerged, eventually top two players or top three players will emerge, and they are the only ones who will eventually land up making money. And this is where, if all of these existing incumbents are seeing that where can they participate so that they can then take their active bets and they can take these companies to the next level altogether. Securities is a great example. BlackRock participation is a testimony. I won't be surprised and shocked if there are exotic structured products that come which are linked to ETFs because BlackRock is already leading the charge.
Yeah, thank you. I think that was great. Yeah, go
I
ahead.
just like to say that that's probably the biggest factor of differentiation between the last time there was a hike on RWAs about 5 years ago. These banks and financial institutions don't put it out.
Yeah.
It was a totally different type of ecosystem. Yeah. And now the fact that they're actually there, they're bringing their assets, they bring their liquidity, makes a huge difference. That's why it's going to be very different.
I totally agree with what you're saying. I think that we're going to get to this in just a second. Switching order of some of the questions here just a little bit, just because we brought up regulation as possibly the biggest barrier to entry on this, both from the audience and from the stage here. Naveen, can you just talk to us a little bit about the state of regulation? You're one of my brothers in compliance here, so you're probably pretty close to that issue yourself. Where are we with regulation around real world assets and sort of like, how do you see that changing over, the short to medium term?
So I think we are in early stages, right? I think just broadly crypto as an asset class, regulators are still learning. Also, there is a huge amount of negative news generally in the media, right? So politicians don't want to be seen as their name associated with this crypto as an asset class. And generally, you will hear the ransomware, investment fraud, love frauds, and lots of other things, right? So you don't get so much of positive news, you get a normal negative news. Of course, a lot of negative news is sensationalized, right? So I would say it's the time where regulators are educating themselves. The good thing is that everybody has reached a conclusion that you can't wish this away. 5 years ago, you'll ask a regulator, they'll say, hey, you know what, who knows in 5 years whether crypto will be around or not. And
Gary
now-
Gensler's still trying, I think. He's got a few months left to try that.
So I think good thing is, good thing is everybody is coming to the point to say, hey, regulation is going to be there. I'm sorry, the crypto industry is going to be there. Let's figure out a way to regulate that. And
Well,
it's a great
I think the
concept.
crypto industry is also realizing regulation is going to be there. So I think you hit on both points.
100%. I think it's mutual both ways, right? I want to make a little bit more controversial statement in terms of, and it's just a conspiracy theorist in me, right? So what's happening in the G7 countries, their finances of most G7 countries represent or look like emerging market countries, right? If you look at the amount of deficit, you look at the difference between the amount of tax they collect and the amount of money they're spending, right? And of course, everybody's printing money. It may be EU, it may be UK, US player, right? And there is no debt ceiling, right? Everybody's like, hey, let's print more, let's print more. So at some point, what will happen is they need to sell more and more bonds to everybody here in the room because they're not enough buyers, right? What do you do then? Tokenization is a great way. You want to sell directly to a Japanese retail investor or Chinese retail investor. Maybe the government says, hey, I don't want to buy it, but there is a Indian Chinese who simply say, hey, it's a great way. I want to hold some American bond, right? So that may suddenly push the regulator, the ecosystem, everybody to say, hey, I want to sell my bond to Justin directly. Yes, there is
I
X
better
amount
have a
of
platform that does it.
that does it. Tokenization is a great way. So suddenly you have this push to sell at any cost. When I say at any cost, there is urgency for a greater distribution force to exist. And then suddenly tokenization become a big time. And then you don't want your bonds to be $100,000 minimum. You want them to be $1 minimum. You want them to be in denomination of the currency. They're just to be able to pay in INR, GBP, yen, what have you, and to be able to invest in that bond, right? So there needs to be this sense of urgency, and to me, that's probably not far away. If I put my logical mind, but just that I can't put the finger on the timing, then it will happen. But it's going to happen.
So that is the first time I've heard someone operating in the crypto space talk about a government conspiracy that's in our favor. I'm going to write that one down and keep it in my notebook. I like hearing and learning new things. That was awesome. Mansoor, I want to turn back to you just a second and get your thoughts on maybe with both regulation, but also in other areas. How do you think some of these barriers to adoption are going to go away so that we can get to the point where the person in India, the person in Indonesia, the person here in UAE can get access to those assets that they couldn't get access to before?
Well, I think as we've heard, there's a lot of the movement forward that's happening already. And I think first of all, you mentioned regulation. It's very complex to effectively match, people using platforms in a certain jurisdiction, the investor in another jurisdiction, the assets in another. But effectively now, with digital technologies, it should be, especially with the application of AI, it should be possible for regulators to effectively make it much more smoother for investors. So the first thing that's changed now is technology has progressed a lot, and there's a lot of regulatory tools that are there for regulating it a lot easier. And effectively, just dwelling a little bit on the regulation part, a few years ago for a regulator, the risk was much bigger than the reward of trying to move ahead on crypto. But they were going to get burnt, they did get burnt. Now though, because you've got not only the regulatory tools, you've got the financial institutions that are coming in there providing the assets, etc. But you've also got the industry itself, the technology is much more secure, much more scalable, much more interoperable. You mentioned about moving assets across different platforms. So that makes it a lot easier for regulators to move ahead. So I think all of the building blocks are there to make it a lot easier, to make it much more open for others. I think though the big drive is coming from this region, where you've got the right networks, etc.
That's why I moved here.
Exactly. So I think it would be a trickle down from two elements. One is the really big projects that want to open up the really big, expensive items to medium-sized investors, or medium to small to that range. That's where you're going to get the first tokenization, but then the same technologies that can be applied to effectively allowing access to people who have no access at all to get the data. A few of the projects that are really interesting for me in that world is completely distributed DAO banking based on tokenization. There's a number of projects around that, which are quite serious now, and a few years ago they were very fluffy. So those kind of things will have those areas, but I think it's a mix of the really high worth assets, tokenizing those to allow a wider spread of investors, but then the same technology being applied to the people who actually possess today. will effectively make that move. So I think this region is going to push that from the high network.
All right, so this is going to be the last question for everybody before I open the floor, and you should all listen because this will be the place that we will all be the most wrong of everything that we've said here today, which I'm just going to go down and ask everybody, what do you think the next 12 months looks like in terms of where we get to with real world asset tokenization, and what are some of the biggest things going to be? So, Frank, why don't we start with you? What does the next 12 months look like? In 1 minute, please.
You mean 12 years?
Yeah, well, so there you can be accurate.
Just like,
12 years.
yeah,
12
yeah,
months
yeah.
is- yeah.
Absolutely for the unit.
Yeah.
So in 12 years?
Yeah.
No, I think ultimately, why not have everything on chain? An IPO should be on chain. Sorry, against all the cumbersome ledgers that exist on all the capital markets, around the globe. I mean, come on. And I'm just like, I don't understand how comes that, for example, all these bunch of, the Larry things of this world have actually come up with Bitcoin ETFs. It's not on the chain, right? I think Franklin Templeton did something quasi-tokenized, because actually they own the token. It's not actually from the peer-to-peer.
Yeah.
Now they've got the Benji.
Well, in
token,
the US,
et
the
cetera.
regulator won't let you.
Yeah,
They-
no,
the-
they got the
the
Benji
chain
token
can't be the-
peer-to-peer now.
can't be the system of
What
record.
can call wallets. So they're getting there. So this year, like 4 months ago, they started. But I mean, this is where we love to be, because I think this is where, I think the ultimate goal should be a retail market. Right? So now, 12 months. 12 months, I think, as far as I'm concerned, for example, SpaceX, I think I would like to get a number of trophy assets really back owning, the model, making sure that we get something that works, across the number of asset classes, going wider regionally. I mean, we're already in different countries, so we see in London, Switzerland, Germany, Monaco, Cyprus, Greece, it's kind of region that we're looking at. So, they kind of elite specific places there. And then, the inflection point in the retail market within 12 months, I don't think so.
No, I don't.
I certainly don't think so. So, and I don't know when then, so I can't be wrong,
Yeah, no problem.
right?
No problem. That was good. Thank you very much, Frank. I'm going to just go right down the road here. Mansoor, in maybe a minute or so, what do you think the next 12 months look like?
I think that the real estate is the dominant.
Yeah.
Next period. I think that this region in particular is going to be the culture for the nation. I think that in terms of new markets being created, I think the property digital rights will be huge one. Because there's such a push towards the creation of new markets in this region, getting ready for the export in the US, for example, with a lot of investment going into the AR layers around that, gaming in particular. We've got the getting World Cup going on right now. That's going to create opportunities to create new markets that I hope will mean that by the end of next year we could have an exchange for digital property digital rights and digital asset rights in this region of GCC. That'll be a really big step forward.
Gotcha. Thank you very much. Raveen, how about with you?
I think 12 months, I see more acceleration of exactly what is happening now. In every single country, there will be some crypto regulation. And primarily that will be driven by customer protection, that will be driven by taxes. Governments want to collect taxes, they're out of money, right? So they need people to pay taxes. And also, in some way, making sure that unregulated platforms can't operate in their particular country, right? So definitely we are moving in that direction, which is hugely positive because this becomes the bedrock for other things to simply happen. Because now, if this sector that's regulated, it's just then adding new asset classes. But the base will start to get established in every single country.
I think that's a great point, by the way. I've seen in other industries as they go from like the gray to the white, that stage where they start getting reliably taxed creates kind of a protection layer for them inside of the government because they start to count on that revenue coming in. So that's a really interesting point.
100%. And it forces the government to get educated.
Yeah.
It forces all the tools to be developed to make sure taxes are collected properly and wrong people get punished. And there's a law, legal system that essentially catches up with new asset class to arbitrate cases where something's not wrong.
We said that with the cannabis in the US.
Yeah, for sure.
Yeah, cannabis.
And that was one of the ones I was thinking
Yeah,
of
you
for
have to
sure.
go in on.
Yeah, yeah. Pranab, to you, and then I'll do my own because if I'm asking you all to be wrong, I'll go on the record to be wrong as well. But yeah, what are your thoughts on the next 12 months?
I think the next 12 months we'll see Bitcoin dollars or more. So let's say
We're at a Bitcoin meetup. Everyone's going to like hearing that.
So I think what it does is that it sort of gives money in the hands of a lot of people, especially people who invested into let's say these ETFs. That means that there'll be incentive for the big banks, the bankers, to do more exotic structured products. Now, how do you distribute these structured products? Because there'll be enough protectionism out there. We're already seeing the geopolitical reality of the world right now. That means there'll be localized regulations, and every regulator will have a licensing process. And with the licensing process, they'll be having very clear guidelines for what is security and what is not security, etc. That means that tokenization has a perfect ground to take off. Everyone may not be very happy to buy, let's say, US Treasury bills, but they'll be very keen to ensure that their debt is the local debt of that specific country distributed to the people out there, so that they can participate in a lot more effectively in the capital markets, in the financial process. It's like a financial inclusion play that could happen a lot more. So what it means is that, let's say, for example, if I talk about India, just as an example, as a case in point, although India does not have a huge, let's say, deficit balance sheet, but what India would love is that, let's say, the SME, a huge number of small and mid-sized enterprises that are out there, they have enough credit. How do you get enough credit? You have private credit to participate. How do you get private credit to participate? Is that can you, let's say, compartmentalize and take the risk and get the relevant people to take, especially the individuals, can I, let's say, put 10,000 dirham equivalent amount of money rather than you're putting, let's say, a huge chunk of money, out there. So I think the democratization of opportunity to participate in different geographies, especially in a very protectionist, fragmented world, wherein let's say Bitcoin has already reached $100,000, so the technology is already proven in the minds of people because everyone has made money, will create a very safe passage for implementation of tokenization. So I think 12 months is a very short period. That's why I think you're mentioning 1 years. But what it does is that it creates an irreversible trajectory for tokenization to take off.
Yeah, awesome. So on the regulatory front, I'll be a little less aggressive than you. I do believe we'll see early regulators like the ones here, Hong Kong, HKMA, MAS in Singapore, et cetera, come out with clear rules for this space so that companies know how to operate in those jurisdictions. That's honestly not a really risky prediction because I'm talking to them and I know the group. My maybe riskier one is I think we're going to actually start to see the first cross-platform secondary markets, where if I buy a token on one platform, I'll actually be able to trade it on a secondary market alongside of tokens from other platforms. And that's going to dramatically increase the amount of liquidity and the transaction volume that's happening in this space. And for me is another one of those really important steps we need to get past. So that's the one in 12 months you'll probably be able to tell me I'm wrong on. We may not be quite there yet, but I'll put that stake in the ground. Questions from the floor. What questions do you all have? Yeah, go ahead.
Let's follow up this. This is something we haven't solved with real world assets before digitalization, right? Secondary market and the value, price discovery. If I want to go sell my car, he doesn't know how much it costs. Peer-to-peer, there's one transaction. Go to an intermediary, there's another transaction. Diamonds, sometimes they've got serial numbers, sometimes they haven't, same clarity. This is something we haven't solved in the real world before digitalization. And the last thing you said, we've seen banking companies and everyone else digitalizing things. Price discovery is easy, right? Treasuries, everyone knows, very easy. Anything else is incredibly difficult. So how do we do this? Because this is VC funding, this is everything. It's very subjective and very localized, structured credit.
So two things. It's a absolutely. I'll send you the deck afterwards. I think it's a great point. So a couple of things there. You're absolutely right. So if you look at the history, what's the largest adoption of RWA in the world today?
Credit.
Huh?
Credit.
Credit? No. stable coins. Stable coins. You take USDC, you take Tether. These are the massive. Why? Because it's not a security token offering. It's not an STO. It's pegged to the dollar. So you've seen that it's been a massive success. I'm sorry, but it's been a massive success. Right? So the next one has been what? The T-bills, the treasury. Again, because it's backed, it's backed, it's government backed, so it's great. So your point is extremely valid. What happens to the rest? So typically that's what we're trying to do. And how are we doing it? Two things. So I come from the AI world, so lots of people go from RWA, as you were saying, to AI. I came from AI to RWA. The first thing is AI. So building the right models, the right predictive models about how the investment is going to perform. That's number one. That's very important. And the way we approach things, because we also come from the finance background, fund management. My partner was the head of TCOM in Dubai, and so we are very strong into proposing private placement memoranda to our customers, so they understand the risks, they understand the full picture. So I don't remember. I think you were saying about the glossy brochure, etc. It's not about brokering. You can't broker everything. If you say, okay, you can buy something for 500 dirhams, a studio in one tower that has already 1,000 other similar things, what's the value of that? There's not so much value. So understanding, having the AI tools to actually understand how your investment is going to perform, backing that up with data, and for example, in our case, we have what we call the Investment Expertise Hub. So we have worldwide renowned experts that look at this and give their stamp saying, yes, we can go for this. And we present that to people that are very qualified investors, very sophisticated investors. So I can tell you, they do, they screen it all. And that's the only way, to me, right now, that's the only way to go at it, which is why it's so difficult to roll this out, to amplify. So I hope that gave you
I want this to happen, but that's not peer-to-peer. We're now adding all these intermediaries which are supposed to escape, right? This crypto is supposed to escape this, but now you're saying you need validators for people to attribute value to this crypto. It doesn't work. We haven't solved it in real-world assets outside of crypto. So hopefully we can say this soon. This is a problem.
I would say that we've seen some of those things happen, for example, with secondary private securities for companies that haven't gone public yet. Where, 20 years ago, there was no way to do those valuations. And today there's trading markets around it, right?
Yeah, this is it. As we have fragmented markets, this is where you have big problems. You have to buy property, other property, you watches.
you can't place anything. You can't place any asset. That's a wrong approach. I was saying you weren't there when you were saying that. But you can't just place something on chain and say, okay, so that's going to magically sell. And I'm going to increase the demand, I'm going to increase the liquidity. That doesn't work. That doesn't work. So it has to be very specific. That's why I was saying, starting with stable coins, extended to T-bills, and it has to be very selected asset classes. And then maybe eventually later, I don't know how long, so don't put me on that, but how long it's going to take, but there will be some adoption across many different asset classes that are really important. And to the retail. I mean, at least that's my question.
So can I share a perspective? So my perspective is that every industry reaches, so there's a tipping point for it to break out. Now, let's say if you look at, cryptocurrencies also, I'm just saying, Binance as an exchange. Now, there's no logic for Binance as an exchange to emerge from a specific region. The point is that a global exchange had to emerge for the entire industry to reach a certain tipping point for ETFs to happen. I'm just saying that everything is a stepping stone to something. So the point I'm making here is that right now it is not fragmented. And definitely the focus is completely on liquid, low margin, extremely safe, low yield products, let's call them treasury bills, stable coins, etc. These are the rails which are getting built. What are the other rails which are there? Is that legitimization of, let's say, Bitcoin, Ethereum, etc. rails. Capital markets also another rails. Now the margin of, let's say, existing incumbents are reducing drastically. They want to sell their exotics to you. And Alex, they want to reach out to you to sell their exotic, their fine art, etc. But they are not able to. Because they can't hire thousands of people out there. Like if Rothschilds have been expanded in the region and they've set up like 60, 70 people, they can't hire another, let's say, 70, 80 people more and eventually reach them out to you. So the only way is that now, I'm just working backwards, is that at one point they will realize that it makes so much sense for us to put our weight behind and also the liquidity behind and also get the regulators to pony along so that, eventually the right kind of assets can be tokenized. But your individual asset to be tokenized, in my opinion, is a bit far off. It will be assets like, for example, Brookfield with a very large real estate portfolio, or let's say Blackstone with a very large real estate portfolio, sort of tokenizing and creating a space for individual to buy. And then somebody like a property finder stepping in and saying that, hey, I can also get some of these individual real estate brokers stepping in and saying that I can also get these individual real estate also tokenized. I think that will happen like an e-commerce, play that happened, much down the line after the internet boom happened.
That's okay. So the tipping point, right? So it's funny to me that everyone talks about polymarket. They're like, wow, finally something. Like in the UK, we've been betting on politics for a long time, and everyone knows on Betfair it's the best predicting market in politics. With smart money, moves here, and you make money. And now it's like money market. It's not called betting; it's called prediction markets. And it's like, wow, this actually works. It's only when there's price discovery of smart money on assets, and so you need to have enough people that value diamonds, value any of these RWAs, that are pricing things across the thing. This was what we thought about when we were talking about tokenization in 2016. You tokenize it, and you like the bar, you buy some tokens of this, and you go away. You can sell those tokens eventually, and it's a mark to market somewhere, and it doesn't matter.
So I'm going to jump in because we're starting to get a little deep into this one, and maybe you can catch up with the panelists after the panel here, so that we don't lose everybody else. Does anyone else have a question for the group? Yeah, go ahead, jump in.
Yeah, Pranav, yeah, ownership, Oracle, data providing, who's going to be, because we have enough data providing from around the world regarding real world assets, let's say real estate or a gold mine. Who do you see that is going to be the auditor or the data provider, and which Oracle protocol that exists right now is your favorite to transmit the information on chain?
He knows the answer. He doesn't want to say
This is called a weight.
yes, exactly. This is a
But okay, so
Who are you working for? Okay, you got the answer.
no, but so I think here the thing is that let's say I'm just taking this example, like let's say if a BlackRock is participating, they will only settle for an industry leader and nothing below that in the space of Oracle. So that gives an answer, right? Because the thing is that there are professionals who are sitting in BlackRock, they are not legitimate. And essentially they are looking at taking decisions which can be career threatening. So they will either look at, let's say, Chainlink, or they will look at, let's say, Bloomberg, hey dude, please, figure out your Oracle, thing on the blockchain thing, or maybe acquire a company and, sort of, build that as a product, and let's take it forward together.
So that's the financial institutions proving that the ownership is right. Now, which Oracle on chain they will use to transmit the information on chain?
I think, so which specific.
You like to joke.
I got the joke. He's still what I'm Chain proof of reserve 2016 approved by the SEC. Yeah, I recommend that.
I mean, maybe it could be down to the trust of the issuer, and there's going to be certain issuers that will be trusted to do that, who are also regulated entities, and you won't need an Oracle at all in that case, right? So there's multiple paths that you can go down there, and one of them might be something like Chainlink, but I'm not sure that's going to be the exclusive way to operate.
Just the data.
Yeah, no, I understand. I know exactly what Chainlink is. Yeah.
But I think what I say over here is like it is very much possible for the one side of the assets to be drawn on the financial assets practically. It's a huge volume, undoubtedly, yes, but underlying assets, if you see whether it's a real estate or maybe like what you can say dams and all those particular stuff in real life, diamonds and gold, what we are going through, those particular assets. When we're going to talk about Oracle for these kind of things, I think it's almost impossible to build right now at this particular stage. The technology does not exist in that particular way because to gather the data from all the nodes, how this asset should be valued at a global stage is something that nobody has solved so far. This is what I was talking about, even few of the guys like Sanjeev, how we're gonna come up with a proof of reserve of these particular kind of assets. That makes you still pretty
Eventually, look, it's like I think the way to look about these things is that is there enough value at the end of the funnel? Definitely any point at the end of the funnel. So who can be the potential Oracle players? Incumbents. Once again, same logic. Incumbents, not incumbents change. So we invested in a company called Grand Protocol, but they did not, evolve to certain tipping point. So the winner is clearly chosen by the space where it's changing. But if changing stops evolving, somebody else will invest. Bloomberg is in a phenomenal position. It's a centralized company. It may be pushed to create a separate division, and let's say R&D division, innovation division. Corporate world has like 20,000 different names to set up something, and they can create a technology stack which can mirror the existing, data and sort of build their own stuff and push whatever data they have. In any case, all these big players are using Bloomberg. So it will be just switching in and saying that okay, this is another you can just switch and start using. So the point I'm making is that the Oracle problem is a very intermediate, small problem. It has been solved in the capital markets. So it will be solved in any case. The real thing is that is there enough honey pot? Is there enough urgency which has been built because of macro situations like the way Nadeem was mentioning and others were mentioning as well? So that we have reached a tipping point for the adoption of tokenized technology, tokenization technology to blockchain, etc. My hypothesis is that we are very close because the world is becoming extremely protectionist, and this is unfortunate, but this is what will accelerate adoption of technology. Technology is the only thing that everyone will eventually wind up agreeing to, because we will not agree with each other as human beings, but we will not question the technology that we use.